So guys, another very special interview. As you already know, we do these special interviews on a daily basis, and today is no exception, where we have Alex Kholodenko. He's over 10 years of strong experience in real estate investing with single family homes, tax deeds, liens, money lending, and fix and flips. So he has spent 20 years in high-tech software industry in Bay Area working as an IT professional. He has founded Wealthy Mind Investments for his lifelong passion for helping people. And that's the website. Probably I'm just going to open it before I will get people confused. So that will be wealthymindinvestments.com. So that's again, wealthymindinvestments.com. You can go and check it out, the website, and see what they offer and what they're working on. So now his focus is commercial real estate investments because of the simplicity of being passive investor, scalability, and tax efficiencies. He has created strategic partnerships with experienced multifamily operators that have boots on the ground. Makes sense. The success of the partnerships has resulted in increase in cash flow and appreciation for all the investors. He believes that busy professionals and investors deserve access to proven wealth strategies in commercial real estate investing so they can enjoy life to the fullest potential. That is so true. So again, thank you very much for joining us today on this day. And day today is 19th of March. So welcome to the show, Alex. I really appreciate it.
Thank you. Thank you for having me.
Thank you. It's a pleasure, and it's an honor, because I looked at the website before. I was like, whoa, that is impressive. And I definitely would love to talk about more about the portfolios and the stuff that you guys manage. You know, it's very impressive. So, but first of all, if we just go back to the times where Alex was, I don't know if you've been lost before, but I think a lot of people have been lost before. Like, what am I going to do with my life? You know, where I'm going, what I'm doing. And you kind of discovered this IT thing, which I'm sure you've been good at. And what happened since then? How did you decide to transition into real estate industry? So, you know, if you just tell your story a little bit to the audience, I would really appreciate that.
Yeah, happy to share. Once again, my name is Alex Kholodenko, born and raised in Kiev, Ukraine. Immigrated to United States, San Francisco, Bay Area, 20 plus years ago. Met my wife. I have two boys and a lot of family and friends locally in Bay Area. And in the late 90s, as some of you know, being able, seeing the trends and being able to see, you know, what are the opportunities that would be currently open and growing, the first boom of internet started. Yeah. And being in Silicon Valley, it was hard kind of to ignore that. And a lot of my friends were starting to go to colleges and universities and graduating with technology degrees and starting to get, you know, very high-paid job. Mm-hmm. And at that time, I was involved in the travel industry, and the travel industry was also not doing that well. Specifically, I was working in a travel agency, and you saw the trend coming that a lot of consumers would actually go directly and buy tickets where? Online, right? Yeah. So I kind of saw that, you know, this particular career was probably winding down, and started to explore other options. And there were so many companies hiring left and right. And so I was able to go to school, get trained, and started my career as a software QA test engineer, which is still a very high-paying job, not only in Silicon Valley, but in the United States. So looking back 20 years later, I was able to transition from a testing role, being able to test computer software programs, working at banks, small startups, financial companies, and I still have a day job, by the way. I'm a busy professional myself. I work in a client-facing role. I managed client relationships after the acquisition of the client. My official role is I'm a customer success manager, and I work with large enterprises such as Columbia, Toyota, Starbucks is one of my clients as well. And I feel fulfilled. Obviously, I do. I love what I do at my day job. I work with clients. I'm never bored. But having said that, I still don't have that financial freedom that would allow me to actually live the life on my own terms. And about 10 years ago, I was experiencing some frustrations with some of the businesses that I was running on the side, which as long as I remember, since age 18, I always had entrepreneurial spirit and a side hustle in addition to my day job. And for about 10 plus years prior to looking into real estate, I was an insurance broker. So I was actually very involved in helping people to get life insurance, medical insurance, for small businesses, including individuals. And I saw that industry also sort of going through transition where through Obamacare and through many different stipulations and hurdles, the insurance industry tried to cut out the middleman, which was, a little guy like me, a broker. So I decided to transition into real estate, and my journey started, as probably everybody else is, by looking into single-family homes. Yeah. And I started doing extensive research because, since in IT, I have very analytical mindset, right? So, if anybody is starting out, I strongly recommend to really understand the math, because end of the day, real estate is not an emotional game. It is a slow building wealth generation vehicle, but you really need to know all the different ratios that's involved with that. So the long story short is I was able to acquire and upgrade my own home during the last downturn, which was in 2008, where the subprime mortgage, a lot of layoffs also was happening. And I saw the power of real estate back then, because in a very short period of time, some of the homes were losing 30 to 40% of the value, which is significant. And being in the area, the average home prices are ridiculously high here. We're still looking at $1.5, $1.7 million. Yeah. And there's still a high demand. There is a very short supply, and because we're not able to build any homes. So anyway, I was able to upgrade my home from a tiny home to a bigger home, and I started to get curious about what else is possible in real estate. So I started to educate myself and went to a lot of seminars, went to a lot of meetups, read a lot of books, and one of the books is that I recommend to everybody. It is a cash flow quadrant, but Robert Kiyosaki, right?
The first one. Sorry for interrupting.
Yeah, exactly. So this is like a Bible for everybody that needs to work around the mindset and understand that there is more than stock market. And I tell a lot of people that we've been brainwashed, including myself, around the stock market, right?
Educational system, it just doesn't do a good job,
Yeah, exactly. And being in Silicon Valley, for example, being in technology, working in technology, and looking at alternative assets, which is real estate, right, is still unusual, because Wall Street does a really good job of advertising and soliciting all of us to continuously invest on dollars cost averages. So all of these Wall Street lies that people kind of carry on a subconscious level, that they're not even aware that there's other opportunities. So anyway, I started with single family homes, and I had a friend of mine that was doing really well in foreclosures and buying tax deeds and tax liens. So I got exposed to that. I went to a few auctions with him to kind of see and pick up his brain, and I did some money lending deals where I would actually loan the money for fix and flip projects, and I would get an interest on that. So I tried that model as well. I ended up buying a home in Orlando that I did Airbnb on, and later on I switched to long-term lease, which I still do own. And about 5 years ago, I started to understand that there is this commercial syndication model that's available. It's a group investment, right? So a group of people could co-invest with $50,000 typically or so, and put a large down payment, including rehab cost on a large project, which could be 200 keys for a hotel, or it could be 200 units for apartment building. And I was a little bit curious about that. So I started to educate myself because, I always had a day job in addition to, working in the real estate, right?
Yeah.
And I really like the model specifically for me and other people who are in high-paying jobs that don't have a lot of time. They can't travel on demand to different cities, tour different properties. So I really like that scalability model that if somebody moves out on a 200 unit, you still have 199 other units that are available to be rented, right? And I experienced it myself, but at one point, I had a tenant at my house that moved out, and I had to re-rent the house with a property manager. But in the meantime, I actually lost some revenue, right? And so I started testing the waters with my own funds, doing that, which is commercial real estate. And I was one of the probably first pioneers that started investing with online portals, which is Realty Shares was one of them, one of the first pioneers that started doing large deals for accredited investors online. And I took a dive. I invested some funds. I did pretty well. Some of the deals didn't turn out to be as good as they were advertised because of the performance and projections and because of the inexperience of the operators. But I was hooked for a couple of reasons. Number one is it requires no time once you make a commitment, which is doing your own research and wiring the funds to an investment. It's a very scalable model that allows you basically to just collect cash flow. Now you have to do your due diligence, right? You have to understand the market. You have to research the operator experience. You have to vet out the deals, from good to bad, right? So it still involves due diligence upfront, but once that is done, everything else is pretty much taken care of because of, again, the scalability model, because the numbers are built in such a case that you're able to just collect the cash flow. Now you have to, again, I'm going to reemphasize, you have to do your due diligence on a sponsor, on the market. But once that's taken care of, it's one of the best investments that's been working really well for me. And another thing I want to mention is it's a very tax efficient strategy. What I mean by that is because of the cost segregation, depreciation, and all the business expenses, experienced operators are able to structure deals in such a way that me as a passive investor, a busy professional, is able to collect that cash flow and pay zero tax.
You get the K1 forms, everything, right?
Yes, yes, exactly. In fact, I recently actually did my own interview with the CPA who was explaining that in more detail. And at first, I was very skeptical, just like anybody else. But then if you really think about it, and obviously the books, Kiyosaki book talks about that, a lot of people are going to real estate because of the tax advantages, because of those write-offs that you're able to take advantage. Again, you have to be educated, you have to do your due diligence and structure it well, but it's been working really well for me personally. So like you said, I've tried different sort of investment types in real estate, and I decided to stick with the commercial, and we've developed pretty good relationship with some of the operators that we want to work with in the future as well.
Well, I think you made definitely a great choice, by doing that, because it's a great space. Because I'm just looking at some stuff here on the internet. Actually, I would love to ask you more questions, dive deep into the deals, but we're gonna discuss that. But first of all, I just want to come back what you just said. You've been young and you kind of always found yourself into the side hustle stuff. Just being active doing business. Would you think, is that your own personal self? Is that who you are, or is that because you're in US? Because that's where like entrepreneurship is pushed in the States, right? Like it's
it is, but I think it's more. I would say it's more related to your personality. I think even growing up, I always had that desire to be my
was your
own
family
boss. And
was your family involved?
no, actually, my family was on my father's side. He was a blue collar working construction. On my mother's side, she always had something going. I guess I picked up something from my mother. Unfortunately, she did pass away while I was still relatively young at age 13. But I guess something was running in my genes.
Yeah, that's beautiful. So I would love to come back to the time what you mentioned where you explore when you found, you know, the single family homes, let's say, and then you explore the syndication. Like, how did you find that? How did you find out about the syndication in the first place? Was it the book? Was it the people around you? Like, because that was how many years ago was that where you discovered syndication?
Syndication level 5. So I think you become who you hang around through it, right? So what I was able to do, I was able to actually go to a few meetups.
Okay.
That specifically targeted people, you know, that were looking for tax advantageous wealth building vehicles. And then, since again I'm an analytical guy, right? So you know, if anybody tells me something for the first time, I'm like, yeah.
Check it out.
Let me go back home and do my own research. Because you know, we all have access to Google and we can talk to many people online. There's Facebooks nowadays, right? So you know, what I did was I took that also with a grain of salt. When I went home and I did my due diligence and I started looking at different options, right? And I really like that option because again, it is scalable and it's a very hands off, so it's not a hands-on, right?
Yeah.
So for people that are like me, that have day job, that have families, and they can't just quit their job and become real estate investors, right?
Yeah.
It is a great option to get their feet wet and start the journey in real estate investing as a passive investor. So that has worked for me. And right now I'm getting to the point where actually I can help other people to do the same. And if I like the deal that I personally would invest my own funds, then I would tell my family and friends.
Got it. Yeah, because if you find something excited, if you find the gold, in your pocket, maybe you want to share it. Maybe you want to share it to somebody. Say, hey, listen, look what I found. So it makes total sense because you want to do well personally, but you want your family, the close ones, to do well financially as well. So it definitely makes sense. So, and I'm looking at the website, wealthymindinvestments.com. Again, that's the website for you guys to go and check it out. It's very impressive. What I'm looking at, it says 3,000 plus multifamily units. So that's no brainer. Multifamily, you talked about that. But what caught my attention, 1,000 hotel units. And that's completely different because that's, this is more of a service type of business. So why does the company that you're involved in, why they do diversify into hotels as well? Maybe you can talk about that.
Yeah, that's a great question. So a lot of people do actually specialize in one thing versus another, which is some people just do mobile home parks. Other people just do multifamily, which is apartment buildings. Others just do hotels. So my partner and I, we thought about this and we've decided not to box ourselves actually in one particular strategy versus the other. It just depends on the market, depends on condition of the market. I think you have to be able to pivot. And, even looking back at my own career, I switched careers multiple times. And what works today doesn't work tomorrow. So, for example, Airbnb has been doing really well, right?
Yeah.
And there's been an amazing returns from cash flow perspective. But right now, it's not working that well because of the travel and all this virus and all this and that. So, in real estate, I think you have to be able to pivot very quickly, and it takes time actually to pivot. What I mean by quickly doesn't mean it's just like that in a day, right? But being able to see the trends, to anticipate what's working, what's not working, and adjust the plan work fine. So right now, hotels are not a great investment. So I would not recommend anyone actually to consider hotels. The prices, the occupancies obviously will come down during the recession. There is no travel at all. I mean, all of these hotels right now are totally bleeding. But when the economy is doing well and it's an expansion mode, it may not be a bad investment. In fact, one of my best investments from a return perspective has been a hotel. I'm actually listing that case study on my website where I identified a sponsor that actually only invest in hotels, and they buy large brands such as Hilton hotels, DoubleTrees, and I was able to almost double 2x on my return of investment in less than 2 years or so with them. That particular investment was in Salt Lake City. It was positioned well, where it was very close to the airport. Salt Lake City is considered a very busy airport, and just timing, right? Just doing the research. Maybe I got lucky. Who knows? But again, we don't want to box out ourselves in a particular niche. So we consider ourselves commercial real estate investors. So right now we're actually looking at storage units because when the economy does shrink and slows down, people do need a space to hold their stuff.
And that will be I'm guessing that will be down south, Florida, probably, right?
Yeah, so we're specifically looking for cash flowing, growing markets. Being in California, I want to be patriotic to my golden state, but end of the day, like I said earlier, it's a numbers game, right? We're just not able to find any cash flowing deals that have also capital preservation in place. California has a lot of run up right now, and there might be good opportunities in the near future. Who knows what the future holds as far as this recession, right? But right now, we're not looking at any deals at all in California.
Yeah. So, because you mentioned storage units, so you're planning to look for those like somewhere down south, right?
Yes.
Because that will be the markets and the properties that I'm looking at currently. You operate. I still see you have up north some properties in there. So maybe you can talk about, your investment criteria, what you're actually planning to look, let's say this year, or maybe in the next 5 years, like what states and for what reason you're planning to invest into these states?
Yes, so that's a great question. So our investment criteria and sort of criteria in general, obviously we want to invest in growing a market. And when I say growing is we look for the inflow of people, right? So we look at the key trends, and all this information, by the way, is available on Google. So you can actually search for population growth, city, Cleveland versus Orlando versus Florida. So you need to identify these trends, right? You want to go into the markets that are attracting people. You also want to know, are the jobs created, right? There, and typically that's one of the reasons why there is a population. Now, when it comes to Florida, there's a lot of people move there because of better weather, proximity to the ocean. Older population tends to move up there. But we've seen a trend where millennials and elder people they actually prefer to rent versus own their own houses. People tend to start families a little bit later in their lives. And older people actually would like to downsize and downgrade from larger homes to smaller apartments. So we look for job growth. We look for, obviously, incoming population. We look at school districts. We look at crime rates. And we also look for experienced partners that are operators that have these boots on the ground, that have systems in place. We also look for very conservative underwriting right now, especially now, because we think that the economy, like I mentioned earlier, is going through slowdown and recession. So there will be a occupancy dip. People are going to lose jobs, and they will have a problem, paying the rent, right? So, we're looking for longer term financing, 5 to even 10 years. To stretch and to put the buffer, and we're also looking for extra reserves right now in case occupancy decreases even more than the projections were.
Yeah, well,
specifically as far as this. So go ahead.
No, please go ahead.
Yeah, especially as far as the states, we're looking for Florida, we look at the Carolinas market. We still look at Texas, even though it's very heavily geared toward oil and gas. But a lot of the markets, such as Dallas, is very diversified. So we continuously to look at that as well. So we're long term, we remain very bullish. But in the short term, we actually turned down a few deals over the last few weeks because we didn't feel comfortable, pulling the trigger and investing in our own funds. So we decided, let's wait for a couple of weeks at the bare minimum and see how this shakes out.
Yeah, definitely. Talk about the underwriting right now, right? I mean, everybody has to pay so much attention with what's going on. I mean, nobody underwrote that there will be. Everybody kind of knew there will be an upcoming, downturn, but nobody planned it's going to be like downturn plus the virus, which means people losing the jobs, like hundreds of thousands of people losing the jobs at the same time. People living in your units, you cannot evict them, because where are they going to go?
No, you can't.
So it's gonna suffocate the business, and but more than that, it's just the people. Like it's a sad time where people have to suffer. So I hope everybody who's watching, you're good right now, but things are gonna even out and life is gonna continue. So talking about continuing life, again, having together with this company 3,000 now and counting multifamily units, 1,000 hotels, which I don't know what's the plan, exit plan for these hotels. With you, maybe you can talk a little bit about that, because I would love to hear.
So luckily for me, I don't have a lot of exposure in hotels right now. I only have one. I expect that the operator is going to suspend the cash flow distributions. I mean, they have to do what they have to do to keep the business running, right? And there's going to be definitely challenging times. There is no question about that. I just heard the report that the unemployment could hit as high as 20% in the States, which could be pretty devastating to the economy. But again, I'm just holding strong, and I remain very bullish in the long term. Again, in the short term, yes, things might get ugly, but when there is panic, there is also opportunities, right? So there will be opportunities to hopefully pick up some additional assets. And when you're building that kind of portfolio, you need to create contingency plans, right? You should not be investing your last reserves into such investments, right? So I am, protected very heavily for myself. I have some additional cash that I'm kind of waiting for things to cool off and then redeploy that. I encourage everybody to be extremely cautious and very protected. I also encourage everybody, to open up a HELOC, which is home equity line of credit. So you can actually borrow against your own equity and buy additional opportunities. I also encourage people to look into refinancing, which I did about 4 months ago for my own primary residence as well. I'm actually refinancing the house that I mentioned in Florida right now. The interest rates are super low, right? Yeah. So it's a great time
everybody's going to refinance.
Yeah, I mean, if you're not refinancing or even looking at that, there's seriously something wrong with you. This could be an opportunity of a lifetime to reduce your expenses and redeploy your cash, right? So I've been in communication with some of the operators. They do have some reserves. I expect, again, occupancies to decrease, but they're also looking at refinancing their existing options to, lower the mortgage payments. And, hopefully Congress also will look into suspending mortgage payments. As you know, for example, in Italy, they have done this. And this would be something interesting. I'm not sure if it's a possibility in the States, but we would not rule out such possibility even here.
Yeah. Well, that's shocking. I mean, 20% is a huge number, and it's going to be in a very short period of time. So hopefully we're not going to go by again. Like, it's the same as underwriting. You just have to do the worst case scenario, and you probably should expect for 20 or probably even more, just in case, because those things can happen, but hopefully we're not going to go there. Who knows now? So, but still looking at the situation that you are currently, I mean, with the portfolio that you have, I mean, I'm keep scrolling and looking at the properties. They're super beautiful. You should guys go and visit the websites just to take a peek of what these guys have. It's very impressive. So what you still looking to accomplish this year? Have you changed your business plan and the things that you're looking to get accomplished before the virus, and now have things changed and you're going to do stuff differently? Like what you're planning to do from an acquisition standpoint for this year?
Yeah, so from the acquisition perspective, the goal for this year was 4 properties this year to participate in 4 different type of opportunities, and we left it open, depends on opportunity. It could be hotel, storage unit, but hotels are definitely out of the question. Okay. New development, not the right time to do new development at all. In fact, we were always looking into more capital preservation and cash flow perspective to begin with. That was our search criteria. So, the quarter is ending soon. We have not been able to accomplish our goal, and we don't feel bad about it, to be honest with you. Like I said, we have evaluated 2 deals last week. One was 55% current occupancy, where in good market conditions, that was a screaming deal because the experienced operator had taken similar properties from even lower occupancy to 90 plus occupancy rate. But right now, we decided, you know what, there is so much unknown and fear on the market that we decided to walk away. Another deal we just walked away was A-type plus property, conservative underwriting, but we just decided that even A-type property might not be the right property to invest. So we typically target B, D minus type of properties. We looked into the Cs in the past, but right now, because of so much calamity again on the market, people losing jobs, the people that rent apartments in C-type, they do not have a lot of cash. They do not have those 6 months of savings. So we're eliminating that option, C-class right now, because this is not the right time to jump in. Again, if the prices do come down to significant levels, we might relook into that. So the goal, as of right now, being entrepreneur, real estate investor, again, you have to be able to shift and focus on different priorities. We still have a goal of 4 deals. We don't know when those deals come out. We're still talking to operators. In fact, a lot of them say that they're more in a slowdown mode themselves to see what this checks out. But I do know that some operators continuously look for deals and evaluate them. So, we're optimistic, but at the same time, we just decided to increase our contingency plans, increase our underwriting, and be even more cautious than before. Because if you think about it, all the markets are very cyclical. This coronavirus was just, additional occurrence that happened in the market that gave that, I don't want to say an excuse, but it's just the timing that was bound to happen anyway. The market has an amazing, great run, including stock market and multifamily and commercial real estate, and it was bound to happen anyway. So I'm not very worried about my current holdings. They will perform well in the long market because the way I invested in them, I did a lot of due diligence on the sponsors and on the deal.
Yeah, I'm pretty sure it's going to do well. It's all about just, people not paying the rent, which is who knows how long is that going to happen. Maybe for the future, people are going to start looking different options when it comes to, tenant screening process. Maybe they're going to start looking for some, I don't know, freelancers, maybe the people who can work from homes more, kind of like 60, 40%, whatever. I don't know, but it's going to, it's going to change the game probably a little bit, from here. So, for the person who is watching right now and thinking like, this is my time, because you probably seen these people, they're like, I'm going to wait for a downturn. I'm just going to be liquid. And once it's going to happen, I'm just going to jump right in. So for those people who are watching and thinking, I'm still going to wait it out a little bit since this coronavirus is going to go away and I'm just going to start buying, investing, what type of advice would you give for those people?
Again, just, be very extra cautious, review the deal with people that been maybe more longer in this game than you. I have various connections and friends that before pulling the trigger, I ask for 2-3 opinions myself from people that have more underwriting experience, that have worked on Wall Street, that have analyzed hundreds and hundreds of deals. Remember, real estate is a team game. If you want to be successful, you need to be around like-minded people and build strong relationships and connections. Not everybody is good as you are in certain tasks, and we all have differences, right? So it's important that you create this relationship. For example, my partner and I, we have coaches. We have real estate coaches that are actually teaching us about different various strategies, about marketing, about markets, about underwriting. So it is important that you continuously sharpen your saw and increase your skill and be ready when opportunity strikes. And believe me, there will be opportunities. I don't want to sound too pessimistic because I'm very optimistic by nature. I believe that we will recover this.
Oh yeah.
But it is very important to be ready for that opportunity and align yourself with other like-minded people that you can bounce ideas.
Definitely, just keeping your sword sharp right now as much as you can. Just keep sharpening it. Sit at home and just keep sharpening the saw. Like observe, learn a lot. Now it's definitely a great time for somebody, because I talk with like real estate people all the time, and everybody's some of those people are working from home, which is probably some part of yourself currently probably just work from home. So, and they kind of look for deals. They just read the books, or they go through the, business plans, and they're going to reevaluate the situation, where we go and what's going to happen, and just sharpen that saw, talk with the people, like the experts, so, the advice you mentioned, team, multiple times before. You said teamwork. So how somebody who is just getting involved into the business now or later, like what is the process to finding the key team members for the real estate business?
That's a great question. So what happened in my case is I went to a lot of conferences, and I get to know people over lunch, dinner, sometimes drinks, and being able to connect with people face to face, and then making decision, is this the person that ultimately you want to partner up with? Because this is a very serious business. As you know, there's thousands of dollars on the line. So you definitely want to be able to work only if you gel with that person, right? Only if you feel there is a right synergy, there is a right vision, that you connect on these levels, that your visions are the same, your underwriting the same. If you're conservative, but maybe it's your partner is not, potentially, that's a disconnect that you want to avoid, right? Because we're talking about illiquid investment. That typically there's a 3 to 5 hold period of time, potentially even longer, right? So being able to find these partnerships is very important. If you're local in the area, check out some meetups. You can also, because of the internet right now, nobody's traveling, right? Everybody's staying at home, and social distancing is the new terminology that is being thrown out there. You can listen to the podcast, you can listen to the webinar, and send an email, or if the person has a phone, maybe call or text that person, and try to open that communication channel and learn from each other. Like I said, real estate is a team game. There is a lot of people that are very open and will share with you what they know. There's a lot of experienced people that will actually spend time with you if you're looking for that information, and if you can give something back as well. So even if you think about it, for a second, our company name, the way I came up with that name is a wealthy mind investment. Is if you have that wealthy mindset, then you're obviously going to be working and producing value and adding value to other people, right? So being able to connect with the people and help others is something that I'm personally passionate about. By applying what I learned and helping others the same to take advantage of this commercial real estate investment is a great strategy. So do not be shy. If you're an introvert, reach out to people. There is plenty of people that are actually happy to help.
Yeah. And I see that you have a passion. Again, you're spending the time, the quality time here, providing all the valuable information for people on this podcast. So it just shows that, that you love helping out, you love other people, seeing succeeding. So, it's just a great opportunity to have you on. So, talking about the marketing, because you mentioned that as well. And I know real estate space is a little bit outdated still.
Yes,
Other businesses start, they're pushing a lot on the marketing efforts. And I'm a big believer, because I have a social media company, that this is the time right now to push a lot on social media, because people are going to sit at home. What they're going to do? They're going to watch TV. They're not going to do that. They're definitely not going to read the newspaper, because I don't think anybody does that now. But they're going to scroll
online, everything.
Everybody's most of the people are gonna scroll on social media, Facebook. That's how we connected. Instagram, LinkedIn, great opportunity. Again, what you mentioned, connect with other people and start building that team. But from the business owner standpoint, I think, pushing more on that and just using that time while people are gonna be sitting at home doing whatever, if you just keep in people's faces, I definitely understand it. And I agree with that if people want to do something, they want to buy something, invest in something, if they don't have money, they're going to find the money, or if they have it, they will look more into investing into something. So just using that opportunity, shifting from, oh my God, I'm a victim, this is happening, into no, look, I'm going to push on it more, because now it's the time to do that. So what do you think, from your perspective, I would just like to get, because looking at the website, and again, we connected to the Facebook, so you're fairly active on social media, but maybe you just can tell people what platforms are you using, and maybe some softwares in the business, again, being a data numbers guy, that kind of makes those day-to-day tasks run smoother for your own business.
Yeah, so in my day job, and many other real estate investors are currently using a tool to connect, which is what we're doing now, called Zoom. Oh, yeah. It's a video conferencing tool, and I strongly recommend anybody who is looking to connect with more people to learn this tool. It's a very easy tool, as you know. It's a plug-in, and then you can be up and running in 5-10 minutes, right? So WebEx is another tool that some other people use. As far as other tools, so we use a CRM system. We send out, we have email marketing campaigns that we send out periodically every 2 weeks or so. We track to see, who clicked on what, and what are the interests, what are their goals, what is their investment criteria, and what's the risk profile, things like that. We use a software called Active Campaign.
Okay.
As far as social media, primarily I use Facebook as of right now. I'm also looking at LinkedIn. I do have a profile that I'm going to be starting to create more blogs and posts on that platform, because that's where a lot of tech professionals specifically look into. We do publish a new blog every few weeks or so. So as new updates and on our website, yes. So we have about 20 right now, and we're continuously be adding new content all the time, because there's always new updates. There is new sightsee. There's new insight. There's something learned. We also have a webinar series. We're going to be increasing that as well. We have one coming up in a week or so with the guy who's been doing it for 17 years, and his portfolio he's invested in more than 1 billion of assets, so 3 times as big. And he was actually able to exit from his corporate job, and now he's a full-time passive, not even active, passive real estate.
What's that? Can you drop a name?
Jeremy Roll. So I'm super excited to be interviewing him in the next few weeks or so. And how I connected with the guy, I met him at one of the conferences. I went to a real estate conference and chatted with him during the break, and found out that we definitely clicked as far as being on the same page, and he was open to explore an interview, and I'm super excited to be interviewing him and sharing that with my audience. So the last webinar that we had was about tax strategies. We actually interviewed a CPA who is real estate investor as well, and we had more than 50 people showed up for the webinar. And especially now, as you correctly mentioned, you can't really travel and get out of the house. So what a great time to learn and connect with people and go on a webinar and ask questions from experts who have been doing it for a long time. We actually started a local meetup in Silicon Valley for busy professionals, but timing obviously didn't work out well, and we're currently suspending that indefinitely until this virus is taken care of.
Yeah, definitely. And I definitely recommend people, I'm sure you have some webinars, as I mentioned, you have with Jeremy Roll coming up, soon, in what you say, a couple of weeks. So we're going to include those for you guys to go and check it out if that's going to be available to the public, if people join, because I think now it's a great time. Again, if you're from the States, if you're not from States, if you're looking to get invested, because again, a lot of industries are a little bit shaky now. So if you have, if you're a liquid, have capital available, maybe you're accredited. I don't know if you accept not accredited investors, but hey, listen, jump in, find out what the real estate investments, what they offer, the tax benefits, all the advantages. Just learn from that. And maybe now is the time to start thinking like, man, maybe I should be investing into something that pays me, monthly or quarterly, whatever the way it's structured. But, it's definitely, a time, I think, to do that. Because who knows what's going to happen with the jobs, in the future with the situation that we're currently in. So
yeah, exactly.
Yeah. So before we go, I just want to say thank you, Alex. That was a great time. I still can feel you can give so much, but the time is a little bit limited in here. So, I just want to say a big thank you. It's been a pleasure. I'm very happy to meet with you and just connect with you. And, I would love for people to get in contact with you as well, personally, if they have any questions. So if you can give the social media platforms that you're actively on, we'll make sure that we include those. So what those would be for people to get in contact?
Sure, yeah. So Facebook would probably be number one. And on my website, I have listed an email, which is alex@wealthymindinvestments.com. And I'm pretty approachable. You can actually schedule a 15-minute call with me, and I'll jump on a call and see how I can help you.
Oh yeah, definitely. Because this guy is definitely here to help, providing this podcast, spending, 30, where there was 40 minutes for free. I don't pay him, by the way. He's giving this to him for free. So this man is definitely a go-giver, very smart, intelligent, in the T space. He works with a company that does super well. I mean, 3,000 and plus units counting. So, they're just looking to help people. And maybe, again, I'm not pitching or selling anything, guys. Look, maybe it's the time to start thinking about, should I be concerned about that, and just get educated? Because if you're going to make a decision, because from a personal standpoint, when I couldn't make the decision, there was a lack of information that was lacking. So, I think this man can fill you up with all that information for you to learn the benefits of the real estate investing. So, of course, we're going to include the links down below. Alex links, go and check it out. Connect with him on Facebook, which you mentioned. You have LinkedIn as well. So all these platforms. And, again, just a big honor, pleasure to have you on. And guys, if you enjoyed the show, you already know what to do. Click like, subscribe to the channel. And as always, I'm going to see you on the next episode. Thanks.